Ladies and gentlemen, good day and welcome to Hariom Pipe's Q2 FY25 earnings conference call hosted by Motilal Oswal Financial Services Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumant Kumar from Motilal Oswal. Thank you and over to you, Mr. Kumar.
Yeah, thank you. Good evening, everyone, and very warm welcome to Hariom Pipe Industries Limited to Q FY25 post-result earning call hosted by Motilal Oswal Financial Services Limited. On the call today, we have management team being represented by Mr. Rupesh Kumar Gupta, Managing Director, and Mr. Amitabh Bhattacharya, CFO. We will begin the call with key thoughts from the management team. Thereafter, we'll open the floor for Q&A session. I would now like to request the management to share their perspective on the performance of the company. Thank you and over to you, sir.
Yeah, this is Rupesh Kumar Gupta from Hariom Pipe Industries Limited, Managing Director of the company. Good evening to each and one of you. Esteemed shareholders, thank you for joining us today. It's a pleasure to share the progress and achievements of our company during Q2, despite some challenging circumstances, including a noticeable slowdown in steel demand and a 5% drop in prices on both a quarter-on-quarter and year-on-year basis, and weather-related disruptions in southern region. We've maintained a steadfast focus on growth and resilience. This year, the monsoon was particularly severe and prolonged in southern India. While monsoon rains occur every year, this season saw record rainfall and flooding, disrupting supply chains and delaying key construction projects. This significantly impacted steel demand in the region, affecting our overall sales. As the rain have begun to subside, we are seeing a recovery in demand, particularly in the infrastructure and construction sectors. This recovery is expected to drive steel consumption in the upcoming quarters, helping offset the slower demand experienced earlier in the year. However, our efforts to adapt and innovate have been fruitful. I am pleased to report total revenue of 31,522.63 lakhs for Q2 FY25, totaling 65,942.96 lakhs in H1 FY25. This reflects a 21% year-on-year growth, a remarkable achievement in the current climate. Furthermore, our profitability metrics demonstrate strong operational efficiency. We achieved an EBITDA of 4,334.78 lakhs for Q2 and 8,891.65 lakhs for H1, marking a 35% growth in H1 year-on-year. Our EBITDA margins for H1 FY25 stands at 13.48%, up from 12.41% in FY24. This increase has resulted in an additional earning of 571 rupees per ton compared to last year, with a blended EBITDA standing at 7,796 per ton as opposed to 7,225 for FY24. This improvement underscores our commitment to enhancing operational efficiency and driving sustainable growth. Operating profit stands at 3,108.14 lakhs for Q2 and 4,776.34 lakhs for H1, representing a 26% increase, and our profit after tax reached 1,575.06 lakhs for Q2, with H1 totaling 3,325.63 lakhs, reflecting a 10% growth year-on-year. Our commitment to financial health is also evident in our cash flow performance. We reached a targeted positive operating cash flow of 5,288.27 lakhs, a significant improvement over last fiscal year's 495.54 lakhs only. Net working capital days have improved from 61 to 58 days, demonstrating efficient capital management. Additionally, we successfully reduced total borrowing from 37,088.54 lakhs as of March 24 to 33,458.50 lakhs by the end of H1 FY25, lowering our debt by almost 3,600 plus lakhs. Regarding our capital raising efforts, we have passed an enabling resolution for issuing equity shares through a QIP, allowing us to raise up to 700 crores over the coming year. This is a proactive step to strengthen our position and enable future growth as we approach our optimum level of 0.7 million tons by FY26. Our team is actively evaluating opportunities in specialized steel products and geographical expansion, ensuring our growth strategy in both thoughtful and sustainable. In conclusion, we are on path of robust progress, achieving strong results even amid headwinds. Your trust and support are invaluable, and I assure you that our management remains committed to driving long-term value for all shareholders. We have already uploaded our financial results as well as the investors' presentation on the stock exchange. I trust you have reviewed this report and presentation. Now, for any questions on financials or compliance matter, I will hand it over to our CFO, Mr. Amitabh Bhattacharya, and Compliance Officer, Ms. C.S. Rekha Singh, to address your queries one by one. And with the festive spirit in the air, I extend my heartfelt wishes for a joyous and prosperous Deepavali to each of our valued investors and stakeholders. Thank you for your ongoing support and confidence in your company's journey forward. Thank you.
So shall we open the floor for questions? Thank you very much. We'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and one to ask the question. The first question is from the line of Gautam Rajesh from Leo Capital. Please go ahead. Gautam, may I request you to unmute your line and go ahead with your question, please? Gautam, can you hear us? Due to no response, we move on to our next participant. Next question is from the line of Hemant Bajaj from Kaizen. Please go ahead.
Thank you for the opportunity. I have two questions. First, the company declares that the capacity utilization for the facility is around 70%, right? So how do we interpret it in terms of the capacity utilization taking place? And second question is that we have a bit stretched working capital cycle and especially the trade receivable numbers. So what's the commentary of the management on it?
So, thank you for your question. First question is about your operating capacity. So, recently we are having 0.7 million tons of capacity of 0.7 million tons. And out of that, as on September 24, we have achieved almost 121,628 metric tons. So here we have to notice that out of 0.7 million tons, our actual operating capacity is 0.4 because we are an integrated steel player. And in our earlier presentation also we have clarified so many times that as an integrated steel player, our gross production capacity is 0.7 million tons, or you can say other way around 7 lakh metric tons per annum. But our net output capacity is coming 4 lakh metric tons per annum. So out of that, so far Q2 FY25, we have achieved 121,628 metric tons. And we are very much hopeful
that by the end of FY26, our optimum level of capacity will be utilized.
Okay.
Now, your next question is about the holding levels of debtors holding days. So basically, as far as you are aware that as of September 30th, 2024, our total debtor holding days to net sales is 54. Earlier it was year-on-year basis, September 23, it was 46. So thereby almost 8 days increase. At the same time, our overall working capital, net working capital days is coming down by almost 5 days. If you calculate it that March 24 versus September 24. 5 to 6.
Okay. I have one another question. Players like APL Apollo and other players in the industry are not offering the credit to their customers, but we at Hariom are offering the credit. So what's the reason behind that? Because can you throw some light on it?
No, sir. Actually, first of all, your question is APL Apollo or any other steel segment in the PL industries. I should not comment on that, but the thing is, everybody offering their credits. Without credit, it cannot be happen. Irrespective of number of days of holding days, that's irrespective. Hariom is not offering not credit. Our concept is not distributor based. Our concept is to sell our product through dealer network. So we are having 800 plus dealers in South India, almost all, and our selling point is almost all 1500. So anyhow, we are offering some credit, and that credit is very much nominal in the present market. Justified.
Okay. Thank you so much.
Thank you. Next question is from the line of Akhil Parekh from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations on the set of volume growth numbers and improvement in the operating cash flow side. My first question is on demand trend, right? I mean, as you highlighted, second quarter was kind of subdued. Are we seeing a better demand now in October? And should we expect the second half of this year to be far better than as compared to first half of this year?
Yeah, to be honest, if you check with the past historical track record of past 5 years of this, any steel segment or any infrastructure company, this is basically Q2 is always become little bit slower due to that monsoon season, because during the monsoon season, the construction had become slower. And if you check with the statistics with the last 5 years also, always third quarter and fourth quarter will be the peak period for any steel sector. So we are very much optimistic and very much hopeful that this third quarter and fourth quarter is much more better than the past Q2 and Q1. And we are very much confident to achieve our whatever the target for this financial year.
Okay. And for next year, we had highlighted, in past we had said, we are targeting 2,000 crore of a top line and probably peak utilization rate. Do we maintain that guidance?
Yeah, sure, sir. Actually, just a few last question also, I have explained that our present installed capacity, whatever we have, 0.4 million the output total capacity, we will be very much hopeful and confident that we will be optimum level of utilization will be happen by end of March 26. Once we have to achieve this optimum level of capacity of 0.4 million ton, definitely the top line will be reached to the expected, as we discussed in earlier so many investors meet and presentation also, near to 2,500 crores.
Okay. Good to hear that. And my second question is the value-added products, right? They are almost now 90% plus of our volumes. So does that imply now our sales per ton may not see much improvement, given that almost 90% of sales are now coming from value-added products, and going forward, the sales per ton will be largely a function of how the steel prices move?
Sir, regarding this value-added product, presently we are almost on 98% our total volume of sales as of September Q2 FY24. If we check, the value-added product is almost on 98%. So that means our total sales quantity is 1,14,059. Out of that, value-added product is coming almost on 1,10,646 metric tons. Okay. So we are talking value-added product means in our terms, value-added product means we are talking about according MS tubes, mild steel tubes, galvanized pipe and coil, cold load pipe and coil, top holding, all are called value-added products. And other steel products means those products which are actually used by the manufacturer like sponge iron, MS billet, HF steel. That all the products we have called other steel products. That percentage is almost 2% in the up to H1 Q2 or you can say for second quarter FY25. So we have sticked on our plan and we are setting our focus on our value-added product system. So as much as quantity volume will be increased, our value-added contribution will be increased and the margin will be consistent.
Okay. Great, sir. And lastly, on the operating cash flows and the debt front, we've done a good job in improvement in operating cash flows. So do we maintain this kind of a run rate will continue as we move forward? And what would be the debt number at the end of this year?
So basically, sir, if you check with our financial, if you gone through with our financial, our improvement in operating cash flow is more than 100%. Comparing to Q4 FY24 versus Q2 FY25. So because we have concluded almost 4.5 into 52 crores. Okay. So but here the point is regarding the second question is your debt. So as of September 24, September 23, our total debt was 411.35, and now we are standing with 333.53. So almost all we reduced in a 12 months 78.05 crores debt. And if you check with that March versus September, we have concluded almost all 30 plus 36.06 crores we have reduced.
Correct.
And continuously our debt will be coming in the coming financial year, our debt will be continuously reduced. And the margin is consistent and the operating cash flow will be growing consistent.
Okay. Sure, sir. This is helpful and happy Diwali to you and your team and best luck for coming quarters.
Thank you.
Thank you. Next question is from the line of Muskan from BNK Group. Please go ahead.
Hello.
Yes,
No,
Muskan, go ahead. Yes,
okay. So my first question is the cold rolled coil that you're producing from the tandem mill of 0.4 millimeter thickness. Will that be used only in the induction motor fans or it is used in both BLDC motor as well as induction motor? And what is the value per content of the fan? And who are the competitors? And what's the right to win in that, sir?
No. Actually, might be there is some wrong interpretation. Actually, whatever the 0.4 mm or 0.6 mm thickness of it, GP coil or cold rolled coil we are going to produce from tandem mill. It is not used in any motor. It is actually EV industry or automobile sector, fan industries. Basically, they are using this kind of coil for manufacturing their product, and that is a very value-added product. Or you can say that realization price is more than whatever the GP price we are manufacturing. So these are the things, and we are already supplying so many companies, corporate also, or semi-corporate also, and in the coming future also we are very much optimistic that these portions of value addition product will be growing. in a rapid, which help us to consistent our margins and our profitability and as well as top line.
Okay, so these coils are not used in the fans, is it?
Pardon? Sorry, can you repeat?
These coils, the CR coil is not used in the fan blades.
No, CR coils are used in the 0.4 mm जो है, that is used for stamping for fan manufacturing for power circuit, and at the same time the CR coil are using for fan blades also.
Okay.
Fan blades also, PEB also, pre-engineered building also.
Okay. So my next question.
Basically, various thickness are different. Every product uses thickness are different.
Okay, sir. So my next question is that we see that the other expenses rose. So what is the reason for it? And also, can you please tell how much is the freight cost in the last year? And where have you captured that in the other expense, sir?
Sorry? Can you repeat once?
Yes, sir. So we see that in this quarter, the other expenses rose. So what is the reason for that? And
Other expenses. See, basically what happened, our company in the second quarter Q2, we are participating in some trade fairs as well as it is a festive season. So therefore, world display and other hoarding and all those things we are using some little bit of branding and promotion. At the same time, you are aware that our company is liable to pay a huge amount for CSR as per the corporate governance. That is mandatory. So this quarter also we are substantially for compliance, we are expenditure incurred in CSR. That is why these items are coming under other expenditure there on the face of. So that's why it is little bit of high, almost all you can say 1 crore increase, not much more. If you do the exact figure, it is almost all 1.01 crores increase from the last quarter, Q1.
okay.
The reason is behind that.
All right, sir. So also how much is the freight cost in the last year? Like where have we captured that in other expense?
Freight cost means you are talking about advertisement, brand promotion.
No, sir. The logistics cost.
Logistics cost. So basically, logistics costs are included in our cost of raw material. And we are very much ahead from the other players because our logistic cost is very nominal because our plant is geographically located nearby the raw material supplier, and moreover we are into the integrated steel player. Therefore, our in-house material are using for end of finished goods. Therefore, the logistic cost is very nominal. We have paid our logistic cost only for purchase of iron ore and imported coal. So that is very nominal.
So the logistic cost for outwards, like when we are supplying.
No, we are not spending any outward logistic cost. That is spent by our dealer.
Oh, okay. All right. Okay, sir. Thank you. And one
we are not having any freight outward.
Understood, sir. Thank you. That will help. So one last question. The payables days has increased from 6 days to 30 days. So what is the reason for that, and will we be maintaining it for the full year as well?
The payable days are increased because we are purchasing imported coil on instance basis. That is our credential and our credibility. We are getting cheaper rate of raw material from the international market with a sudden credit facility, almost all 30 days. So that is the reason we are maintaining the healthy margin, and we are showing our operating profit and EBITDA is much more lucrative due to one of the major reason you have asked the correct question. So this is behind the main reason we are able to crack the deal, and that yes, it is correct, and we are very much hopeful to be maintaining in the same repo in the coming future.
Thank you so much. Wonderful.
Thank you very much. Next question is from the line of Vineet from Chris PMS. Please go ahead.
Hello, sir. Vinit this side.
Right,
My
Vinit, you're audible.
my first question is with respect to the falling steel prices. Like, we are seeing that steel prices are falling, right? So do we maintain this guidance, or like you have been confirming that you will be able to achieve the 2,500 guidance? But my concern is with the volume growth. Like, we will have to attain more volume growth to achieve the same level of revenue. So what is your commentary on that?
No. Whatever we have said in our management speech, our English event, why we are talking about the price is dropping. If you check the price average sales realization, so in Q1 FY24/5, if you check that our total quantity of sales is 57,990. You can note it down, not an issue, against the top line of 343.18. Therefore, the average realization is coming 59,175, whereas in our current quarter, Q2 FY24, our total volume sold is 56,065 to be precise, and our average realization is 56,057 rupees, where against the top line is 314.28. Our total revenue is 315.23, which is including the other income, but 314.28 is our entire top line. So therefore, the realization is coming, average realization is 56,057. So almost about 3,000 down. Therefore, the entire realization dropped down by 5%. Despite that, the realization is only impact the top line of in terms of value, not in terms of profit. Here we have to understand that despite of the 3,000, our EBITDA goes up. So that is the matrix, that is the USP which we have compared to others, that we are able to, in any circumstances, our profitable margin per metric ton, which we have so many times we have given the example, that it is increased by 500 plus of rupees. So that is the reason. So it is, I am rest assured that through you and through this platform, that it will not impact the Hariom profitability, whether the price is coming down. Even though in our prospectus also we have clearly mentioned whenever these price fluctuations are coming, we will be able to pass on the price fluctuation to the in front of the consumers, and we are very much capable to do that. So our profitability is intact and our commitment is fulfilled.
Got it, sir. And sir, another question which is in line with the question that previous person asked, like, just a confirmation, our trade payables have increased from 12 crores to 108 crores, right? So this is because of the import that you have done, right?
Yes, absolutely correct. You are absolutely correct. And not only for that, we are getting the cheaper rates compared to the domestic market value.
Okay. So this rise is on account of the import only, majorly.
Yes, absolutely correct. And presently we are getting the credit also from the domestic players also.
Mm-hmm. So because we are seeing a good operating cash flow this time, right? 50 crore positive operating cash flow we had, and trade payable, like this type of trade payable positively impacted us. So will we be able to maintain this going forward?
Yes, definitely, sir. Our mechanism is only like that. If you remember, Mr. Vinay, in our earlier investors call also and one-to-one call also, I have explained so many times, we are closely working on certain credit facilities and credit terms. We are closely working, and hopefully we will be achieved. When my operating cash flow was 100 crores negative, at that time I was committed, and we have achieved this goal, and showing that we are strict on our plan, and in the coming future also we'll be able to manage.
Okay. And sir, can you please throw some light on the QIP that you have done recently, like 700 crore fundraising, right? So what is the purpose behind, and what are we planning? Are we looking at any inorganic development going forward?
No, actually, to be honest, in this speech also it is clearly signaling that QIB is just a enabling resolution valid for 1 year. We are very much,